Hey guys, welcome back. Today I'm going to talk about self-directed IRAs because I'm always hearing people say, hey, I'm going to put my real estate in a self-directed IRA, or I want to contribute to a self-directed IRA so I can invest in real estate. And while it might be a good idea, I'm actually going to offer a pretty controversial opinion on it, which is a lot of times it may not make sense. And that is because real estate is such a beneficial investment from a tax standpoint, not just from a financial standpoint, because there's already so many benefits allowed through the tax law that investing in real estate, which already receives those advantages through tax-deferred retirement accounts, actually can potentially erase those benefits. The first reason you may not want to invest in real estate through an IRA is because of depreciation deductions, which we've talked about before. Right? So those are those magical deductions that's based on the cost of the property, not necessarily what you invested, but the total cost, right? Your down payment plus debt, you can depreciate that cost. Sometimes you're able to use that depreciation not only to offset the income from your rental property, but you may also be able to use that to offset other income. For example, if you have other rental real estate, you may be able to use it to offset positive taxable income over there. If you're a real estate professional or if you're active in real estate, you may be able to deduct it against other types of income like wages or maybe other business income. But when it's in a self-directed IRA, it's trapped in its own box, which is separate from you. It's a separate entity and separate taxpayer. So you can't use those deductions to offset your other income. And even if you have other income or other investments in the retirement account, well, it's a tax-deferred account, so deductions in there are basically useless to you. Most of the time, that retirement account isn't taxable anyway, which leads me into my next point, which is leverage. Most of the time, you're going to use leverage or debt to purchase real estate. Well, when it's in a self-directed IRA, you have a concept called unrelated business taxable income. And UBTI, one of the items that falls under this category is essentially income that is generated from debt. So what the IRS requires you to do is to calculate how much of the income in the retirement account is a result of using debt. And if you're over a certain amount, or you may have to pay tax on that at the applicable tax rates for UBTI. So if you're using leverage for real estate anyway, and the whole point of using a retirement account is to not pay tax, well then if you're generating this unrelated business taxable income because you're using leverage to buy real estate, then you're basically making it pointless to invest through the retirement account, unless it's a very small portion and you're using very little leverage. The third reason that you might want to avoid using a self-directed IRA for real estate is because the sale of real estate is actually subject to preferential tax rates most of the time. This means that you actually pay a lower rate of tax when you sell real estate than you do on other types of income, like from your job or business income. And this is referred to as the capital gains tax rate, which, depending on which tax bracket you fall in, may be 15 to 20% lower than the rate you're paying on other income. Contrast this with when you take money out of a retirement account, it's ordinary income, which means it's at the graduated tax rates. It's not at a preferential tax rate. So if you invest in real estate and you sell real estate in your retirement account, and then you take a distribution in retirement, you're paying ordinary tax rates. So you've effectively converted what would have been a capital gain if you had invested outside of the retirement account, which would have been taxed at a lower rate, to higher rate income by doing it through the retirement account. So the only real benefit that you're getting if you do that is potentially the time value of money, where if you sell the real estate now, but you don't take a distribution for 20 years from now, then okay, maybe it's worth it. But in the meantime, what are you investing in for that 20 years? Well, if your intent was to do a self-directed IRA, you're probably investing in more real estate. So really, you're just pushing off capital gains that you would have paid at a lower rate, and then you're recognizing it all at a higher rate later in retirement. And lastly, for self-directed IRAs, there are a lot of rules restricting what you can do. And this can really handicap you sometimes and change your investment plan to something that you may not otherwise do. I won't go into a lot of details on these. You'll definitely want to check it out before you open up a self-directed IRA. They have a lot of things that fall under what are prohibited transactions. So for example, you can't derive any type of benefit from real estate that's owned by your self-directed IRA. So you couldn't, for example, invest in a property and rent it out as an Airbnb most of the year, and then every now and then when it's not used, go use it as your own vacation home. That would be a prohibited transaction because you're receiving a personal benefit from it. You also couldn't rent out a portion of either whether it was for a retreat for your business or if you had an office building, you couldn't rent it to your business if it's in your self-directed IRA, because then you're also self-dealing, and that's a prohibited transaction. So those are 4 reasons why you may not want to use a self-directed IRA to invest in real estate. Now, I'm not saying that you should never invest using a self-directed IRA, but I am saying that real estate is already incredibly advantageous from a tax perspective, and you really need to consider everything you're giving up by placing real estate in a self-directed IRA and what it's going to restrict you from doing in the future. So I hope this helps, and I'll see you guys in the next video.